Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia and you're watching Trade Talk. It's an interesting week that we've been witnessing clearly. From a market perspective, a cautious midweek is what we've seen so far. You have Nifty, which is actually hovering around those 19,450 levels, and Bank Nifty is just a shy of 44,000. Now, taking cues from the global markets, it's absolutely positive, taking the longest winning streak that the US markets have been witnessing since November 2021. In fact, 7 or 8 consecutive sessions of gains that we have seen. You have lower yields as well, which are supporting markets. Plus, you have crude prices, which have inched below the $80 per barrel mark in the first time in the last 3 months. So that's again auguring well as well. And it's helping boost the sentiments for the Indian equity markets. Overall, if you see, the kind of trend that we've been witnessing is a range-bound trade, but there is consolidation that is coming in at higher levels. There is that indecisiveness that we've been witnessing between the bulls and the bears, but which side of the bulls or the bears the investors fall towards is what we need to wait and watch. Moving on, realty and pharma. Clearly, the outperformance has come in there. In fact, real estate, which did see one day of a blip, has come back on the positive terrain. Pharma stocks are also seeing traction, and seeing the way Lupin numbers have panned out, where Varsha will get us more on it, you could expect that rally that could continue with regards to pharma names in today's session. Apart from that, financials as well as IT saw some bit of profit booking in yesterday's session, so that's going to be a space we will continue to watch out for. And you have the sugar pack that continues to remain in focus on the back of the worries that we've been seeing, specifically with regards to where Brazil goes. FIs and DIIs, that struggle continues to persist, and it's mainly the DIIs who are coming as a rescue to the markets in the last couple of sessions. And that global stability that we're talking about is also supporting. So that's what the setup is looking like. But now let's head across to Agam to understand how important is 19,400 from a FNO perspective. And you have Bank Nifty, which is just shy from 44,000 levels. What would that mean, Agam?
Right. So, we're watching out for round numbers here. More than 19,400, we'll be watching out for 19,500 because that is a crucial pivot point. A lot of traders are looking at that, with an opportunity to perhaps go along. Should we see the Nifty sustain about that mark? In yesterday's day of trade, the Nifty didn't see too much in change in open interest. In fact, it declined marginally, and the Bank Nifty futures was, the open interest was up around 12%. So we clearly did see a lot of position building, despite the fact that the Bank Nifty really didn't change too much in terms of its underlying. To talk about levels in today's day of trade, at least based on options data, speaking of the Nifty, we are keeping an eye on 19,500, as I spoke about just a moment ago. That's where you see max OI, but it also forms a little bit of a psychological range to take out as far as the Nifty is concerned, and a lot of traders are now starting to talk about that. We do have some activation at around 19,300 as well. Of course, we continue to see a lot more addition in OI for all the strikes and calls and puts between 19,300 and 19,500. Moving on to the Bank Nifty, and as we move over to the new expiry, keeping an eye on 44,000. This continues to see max OI, whether or not there is an expiry or no. And that's going to be something that's going to be crucial once again for the tilt upwards as far as the bulls getting activated. So keeping an eye on some of these levels as we move into trade over the next couple of sessions.
Absolutely interesting. So it's Bank Nifty that is going to be interesting, because after the profit booking that we've seen in yesterday's session, let's see how that pans out today as well. Thanks, Agam, for getting us the number crunching as well. So that's from a market perspective. But one of the global factors from the commodity side that we've been tracking is crude. Crude almost at a 3-month low. We've hit that $79.9 per barrel as well. In fact, 79.54 is where Brent was last trading at this morning, and NYMEX was at around 75.53. Now, what would this actually mean, and what's the trajectory looking like going ahead? Let's welcome in Peter McGuire to get us more. Peter, good morning and welcome to the show, and a pleasure to speak to you as always.
Lovely to see you, Hiral, and to everyone, and including yourself, of course. Happy Diwali, and lovely time for you all in India. So celebrate, please.
Thank you so much. Wish you the same. And watching out for India, Australia soon, hopefully in the finals.
Yes, well, it will be one dynamic. If we're in the final together, it'll be a game like no other, I'm sure.
Peter, you should be in India, I'm sure, with regards to the World Cup now. So we'll talk about it in a bit. But very quickly, in terms of crude, this is something where we've seen at a 3-month low now. What are you picking up on it? I mean, is that a trend that we will see that downtick that will continue? Or are you expecting this to be a short-lived correction?
Well, I think a number of things, Hiral. You've got to look at, if we look at economically and look at those export numbers as far as what China announced on Tuesday, they were very, very poor. So that gives you an indication as far as global, I suppose, consumption patterns, because they make products for the world. And if the exports are slow, then that's telling you that it's weak demand. Secondly, of course, the war premium seems to be stripped out of that Palestinian-Israel situation. And there was probably $4 to $7 or $8, if not more, that was wrapped up in that from a war premium. So that's been stripped out. And the third thing, of course, is that the steam's come out of the market in the sense of how we're looking heading into Christmas, demand picture, geopolitics, but geopolitics has settled down. The Fed said there won't be a rate rise. You've had a very strong push on US equities over the last week and a half. And maybe that's going to continue over the next couple of days as well. So I think all of those factors in turn have pushed crude off and pushed it down solidly.
Right. So, Peter, we've been hearing of weak demand prospects with regards to China and Europe. There is lack of supply disruption as well from the Middle East conflicts. And you have US inventories which are rising as well. Do you think these three factors could actually weigh down on prices then?
Well, I won't be surprised, Hiral, to see, maybe a few more dollars pushed to the downside. No one knows how low it can go. I mean, it might bounce at, $73, $72. You've got WTI, as you mentioned, 75.5. So there might be a few more dollars. We don't know where the floor is going to be. And if there's no bad news, then that's a good sign for the consumer, because oil prices should give up some of that heat. The other side, of course, is where are we with OPEC Plus? What's the situation as far as production, and where are the Saudis and Russia thinking? They want naturally higher oil prices. So it's a little bit of a battle at the moment. It's a tug of war, and I'm not sure who's going to win.
So, Peter, on the tug of war, what's the downside that you're watching out for in terms of crude, and where would you cap the upside?
Well, I'll answer the upside at the moment. Without any war premium built in and no geopolitics, and if the current status quo lasts till the end of the year as far as relatively good numbers with equities and there's no disruptions or no black swan events, then possibly 85 is where crude is probably going to see an upward level. As far as a downward, you might see support at the $70 range. Let's just see if it gets down there, and then how much further or how much momentum it has. I'm referring to WTI also, considering it's now at $75.
Right. So that's going to be interesting to watch out for from here on. Thank you, Peter, so much for joining us on the show, and hoping to speak to you if India and Australia do play in the finals, and we'll see where we go from there on. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral.
So that's Peter clearly giving you a range in terms of what could happen with crude, and the global factors are absolutely crucial to watch out for. One of the stocks that's had a bearing on the back of lower crude prices is HPCL. That stock has been on a tear. Now, the kind of moves that we've seen have been spectacular. My colleague Mika standing by to get us more in terms of what's working in favor of HPCL. Mika.
So the stock has been up for the past 9 consecutive sessions. It's up 19% in the last 5 trading sessions, and it also reached its highest price in the last 15 weeks in trade yesterday. Now, what's working for the company is that there are a few pointers. The first is a Q2 earnings. Despite the company's Q2 metrics, they were down on a quarterly basis. They beat the estimates, and they were up on a yearly basis. Furthermore, the lower crude prices, as Hiral noted, were well for the company, as first it reduces their cost of sales. It improves their gross refining margins and thus helping the companies profitably here on. Additionally, the latest director commentary has also been positive. The company plans a 75,000 crore capex in the next 5 years, and it also plans to operate their Vizag refinery at 13.5 million tons. There have also been talks about the company selling away their lubricant unit to a separate entity. The director indicated that the company may plan an IPO of a demerged lube unit. Additionally, the street and the brokerage outlook have also been majorly positive. The stock has 20 buys, 8 holds, and 4 sells, and a return potential of 5.6% according to Bloomberg. Morgan Stanley double upgraded their rating on HPCL to overweight yesterday at a raised target price of 364 rupees, which offers a 22% upside to the stock's current price of 298 rupees. The brokerage states that the company's delayed transformation is back on track and that the Rajasthan refinery, which is estimated to be completed in 2026, will raise the refinery margins for the company, which will be very beneficial for the company. Prabhudas Leeladhar have also maintained their hold rating and raised the target price to 272 and raised FY 24-25 EPS estimates. And Nirmal Bang also upgraded their rating to a buy rating at a 350 target, which is a 19% increase.
Right, so that's HPCL. Staying with this space, you have Oil India also that reported numbers. How has the quarter been?
So net profit fell 54% quarter on quarter, but this was, and missed analyst estimates, but this was only attributed to a 2,363 crores one-time loss set aside for an ongoing litigation. Despite this, the company saw quarter-on-quarter improvements in revenue, EBITDA, and their margins, and they beat the estimates. And the EBITDA was mainly driven by crude production, which was up 5.7% year-on-year to 0.835 million metric tons. The refinery products also saw a remarkable 2.64x quarter-on-quarter growth in terms of segment-wise revenue. Crude oil, natural gas, and pipeline transmission segments were also up double digits on a quarterly basis, but LPG and the renewable energy segments declined 6 and 5% respectively. There was also significant change in the revenue mix on a yearly basis. The refinery product segment contribution dropped from 57% to 50% this quarter, while crude oil contributions rose from 33 to 37% this quarter. Additionally, the company also announced a 3.5 rupees interim dividend for FY24. The record date is November 22nd and it's scheduled for payment before or on December 8th. In terms of stock performance, it's up 0.18% in the last month and 45% year to date. It also trades at a lower price to earnings ratio than the industry P and its peers P, and it has 15 buy calls and 3 sell calls.
Right, so that's with regards to Oil India. It's going to be interesting to see how this stock opens up in trade. Thank you, Mika, for getting us the details. Moving on to the pharma pack, you have a Lupin that is in focus and a spectacular set of numbers that have been reported. In fact, that could be one of the factors that could lead to a rally in the pharma space today. My colleague Varsha is standing by to get us more in terms of what has worked for Lupin. Varsha, good morning.
Good morning. So as you rightly said, so company number did beat estimates on all parameters, if you see. So revenues was up 21% at 5,038 crores. Now, EBITDA was up 2.2x. And margins, if you see, were 18% versus 10% last year. Now, cost of raw material, which was 24% of sales last year, was 20% this year. Also, net profit was up over 3x at 489 crore. The other income also helped in uptick of net profit. If you see the other highlights for the business, US launch of tiotropium DPI, which is used to treat lung diseases such as asthma, was the highlight for the quarter, making inhalation a substantial portion of the US sales. Also, North America sales was up 17%, India sales was up 3.2%, Europe, Middle East and Africa was up 19%, but global API sales for the business were down 20%. So overall, if you see here, cost management, operating leverage helped company to drive strong top line and bottom line growth. So overall, yes, Lupin will have, this is the one stock which should watch out for today's trade. Yeah.
Right, and it's interesting to see how the US business has actually crossed a sale of almost $200 million, and this phenomena is happening nearly after 2 years, right? So that's going to be an interesting aspect to watch out for from a business perspective. Thank you, Varsha, for getting us the details. So that's with regards to Lupin. But moving on, a whole host of other stocks and companies that have reported numbers from the broader markets. Rishi standing by to get us more. Rishi, with regards to the other numbers, I think it's a huge list that you have. Quickly take us through, which are the ones which have done well, which are the ones which could see a weak opening.
So firstly, I'd like to start off with the stronger numbers. So there's Concord Biotech, which has done really, really well. So its revenues were up by 65% and margins expanded by over 2,000 basis points. Now, this was primarily driven by a 46% growth in its API segment, which is its largest segment, and its export revenue also grew by 90%. And eventually, it reported a PAT of 81 crore compared to a PAT of 22 crores. Then we have Tata Power, where margins and profit beat estimates. Its revenue was up by 12%, margins expanded by over 700 basis points. Now, about 84% of its revenue came from its core business, and the PAT grew much less compared to the margin expansion because its overseas contribution from other JVs have been declining significantly. Now, then there's Wellspun Corporation, where the revenue was at 4,000 crores compared to 1,900 crores in the previous quarter. Now, the surge in revenue was driven by doubling revenues in its steel product segment, and the steel product segment's profit also was at 362 crores compared to a loss of 52 crores in the previous quarter. Similarly, that's the reason why we also see a significant uptick in its net profits as well. Then there's Mazdon Dock, where its revenues was up by 7%, but margins expanded by almost 275 basis points, and its profit was also up by about 55%. Now, this is driven by a reduction in input costs, and also it's been getting a lot of orders during the quarter. It also announced a dividend of 15.34 rupees per share. Then there's Pidilite Industries, where the earnings were largely in line. Its overall cost decline drove margins, but the company was saying that it is intending to set up a lending business. Now, this new business will provide credit to its domain ecosystem, and eventually the credit will be provided as small value retail loans. So that is a stock that you need to look out for. Then there's Balaji Amines towards the weaker side, where the margins were down by over 1,300 basis points, and this is primarily on account of lower realizations in the entire chemical space as well, because there's a lot of China dumping which is affecting the agrochemicals realizations, and it missed a lot of estimates. Then there's Sanofi India, where the revenue was down by 67, when the revenue was up by 1.2%, and the EBITDA was up by 16%. So it beat estimates mostly in line. Then I'll just give you a quick update with regards to the other companies that reported results. So there is PI Industries, MedPlus, and Patanjali Foods that reported a reasonably strong quarter, and compared to there's Bata, HEG, Gujarat Alkalis, and SKF and BHEL. That are some companies that we reported some weak set of numbers. So these are the stocks that you need to watch out for.
This was 100 in a minute kind of news bulletin, probably, Rishi. Thank you for getting us the updates. This really helps in terms of understanding how the stocks could open up in trade today. So that's with regards to where reviews are concerned. But let's shift focus to companies that will be reporting numbers today. You have Ashok Leyland that is in focus as well. Clearly, if you see from quarter perspective, we'll have Vinay who will be joining us with more on that. But before that, we have Apollo Hospitals that reports numbers as well. Varsha standing by to get us more. Varsha, what's the key expectation with Apollo? Because yesterday I did cover up for you to do Apollo, thinking that the earnings were yesterday. But help us understand more.
Yeah. So as Apollo's results are expected today, so according to Bloomberg estimates, revenue is expected to rise 13%. Now, Street is expecting better occupancy rates, improving average revenue per operating bed. EBITDA is expected to rise 12.5%. Now, this is backed by hospital business and reduction in losses on account of cuts and discounts are offered in online pharmacy business. Also, the payer mix is expected to improve. An improvement is expected in its ancillary business. Also, if you see, EBITDA margin is expected at 13% versus 13.3% last year, and net profit is expected to rise 22%. Now, Hiral profitability is expected to improve due to favorable seasonality and improved operating leverage for hospitals. So overall, I think the numbers for APL Apollo and hospital as a sector will be good for Q2 FY24. Yeah.
Right, so that's with APL Apollo. Varsha, apart from that, you have a Biocon also that you have been tracking, right? So what's the news there?
Yeah, so Biocon Biologics, which is a subsidiary of Biocon, has entered into an agreement with Eris Life Sciences for divesting its dermatology and nephrology branded formulation business units in India. The transaction is for 366 crore. The total transaction value for the divestment includes working capital conveyed as a part of the deal and represents an multiple of 4x on revenues and 22x on EBITDA. Also, the divestment of non-core assets will allow company to unlock value with their branded formulation portfolio in India and sharpen focus on core therapies such as diabetes, oncology, and immunology. Of course, the divestment is expected to close by the end of November. So let's see how it will play out with Biocon, as Eris Life Sciences is good in dermatology.
Right, so that's going to be an interesting take on Biocon as
Yeah.
well. So both the stocks will be in focus. Thank you, Arsha, for getting us the updates in terms of pharma as a pack. As mentioning earlier, Ashok Leyland, a strong set of numbers that is expected and could be on the cards. Vinay standing by from Delhi to get us more in terms of what could be expected. Vinay, what is your expectation from Ashok Leyland?
Yeah, morning, Hiral. So Ashok Leyland is likely to post a profit as compared to loss last year. So the profit may be at 164 crore rupees. And this is entirely driven by the sales, which rose 10% in the quarter to 49,000 units. So within these sales, if we see the contribution of medium and heavy commercial vehicles is higher because sales there rose 15%, while the sales of light commercial vehicles were up only 2%. So you can say that the performance will be driven by the sales of medium and heavy commercial vehicles. And this impact you can see on the EBITDA as well, which is likely to rise 77% in the quarter. However, the EBITDA margin is likely to expand just a little bit to 10.6% from 10.4% last year. What I gather here is that because of the investments and the sales in the electric vehicle arm, Switch Mobility, the margin may be getting impacted here. But the revenue is rising 72%, which is showing up because of the higher sales.
Right. So that's going to be an interesting one to watch out for. In fact, this will help us understand what the trends are looking like because, from an inventory perspective, from a festive demand perspective, and as we know, the passenger vehicle inventory with regards to the month of October is at the highest. In fact, 65 days is what we're staring at. And on an average, the inventory days in the passenger vehicle segment stands in that 30 to 35 days range. Though you have the festive season, which has been broken up into 2 months this time. So we will have to wait for the November data or the FADA data that comes in mid-November to understand whether this is irregular. If so, we could see a hit that could come in terms of margins and to understand where this inventory buildup is happening. But moving on, Gujarat Narmada Valley, that's a stock to focus on in today's session on the back of the buyback that has been announced. Himansh is standing by to get us more in terms of what would this mean. Himansh, good morning.
Good morning, Hiral. So Gujarat Narmada Valley has declared a buyback along with their results, and the buyback is sizable as the company has announced 84 lakh shares that are being brought back, which represents about 5.46% of their equity stake. Now, the buyback price is set at rupees 770, which brings the total offer size to about 652.8 crores. Now, this excludes all the transaction expenses, but the buyback total offer size would account for roughly 7.9% of the aggregate paid-up capital and 7.8% of their free reserves. The record date for the buyback is set for November 24th, and the retail quota, which is 15% of the total offer, brings the total retail reserve portion to about 12.7 lakhs. Now, this number could be higher depending on the subscription from the retail investors, not subscription, but the interest that they garner. Our calculation suggests that the acceptance ratio for the retail investors is about 3.6%. Now, what's interesting to note is that net income for the company as a whole was about 1,472 crores for the previous fiscal. Now, this 652 crore buyback implies that it was almost 44% of last year's profits. Now, we don't exactly know how they will be utilizing the funds to secure the buyback from their free reserves, from their security premiums, and so on. However, this follows after the Gujarat government back in April mandated a revision in their capital allocation policies, mandating Gujarat PSUs to allocate roughly 30% of the net profits or 5% of the net worth in terms of returns to shareholders. This could be in the form of buyback that we are seeing here, or dividends, or stock splits, and so on. The company has announced an equity dividend of 300% for the financial year, the last financial year, and GNFC has been paying dividends consecutively for the past 8 years. So it's going to be interesting how their capex plans as well as their expansion plans shape out in light of these capital allocation policies. We saw GMDC revise their dividend upwards earlier this year, and we are seeing the same with GNFC as well.
4.6% is the dividend yield that
Right.
Gujarat Narmada has given out. And both the companies, GNFC as well as you have Gujarat State Fertilizer, that could be in focus as well, because both of them are jointly promoted enterprises. So let's see how this pans out for the company. But moving on, you're tracking a couple of other counters as well. What have you picked up?
So there are a bunch of stocks in news that could see some action today, starting off with Pidilite Industries, where the company is planning to make its foray into the lending space. Now, the company will set up lending business for providing small value retail loans within its ecosystem and it has acquired Pargro Investments for rupees 10 crores, and it plans to invest up to 100 crores in the lending business over the coming 2 years. It will be doing so in the mix of tranches, both from equity and debt as well. Then we have Biocon, where its unit is planning to sell the non-core branded businesses in India to Eris Life Sciences. Now, these two units are concerned with dermatology and nephrology businesses, which will be divested for a consideration of 366 crores. The slump sale is expected to close by November of this year. Then we have Titagarh Rail Systems, where the board approved fundraising of up to 700 crores via qualified institutional placements. And then you have Power Finance Corp, where the board appointed Paminder Chopra as their CFO. He was previously the CMD of the company as well. HDFC Life, where the company has received a 20 crore demand notice from the Central Tax Commissionerate. The notice over alleged irregular availment of input tax credit is what has been the case here. Then we have IRB Infrastructures, where the company reported a 30% year-on-year rise in the October toll collections, and they expect that the festive season ahead, as well as the Hyderabad Outer Ring Road tolls, which have commenced their operations, are expected to drive in growth in the second half. They also expect the commencement of their build, operate, transfer project in Gujarat in the coming months as well. And lastly, you have Ramakrishna Forgings, where the QIP issue opened, which is set to open yesterday, has been set for the floor price of 644 per share, and this represents a discount of 6.6% to their previous closing.
So these are interesting ones to watch out for. Thank you for getting us the details, Himansh. So whole host of stocks that will be in focus on the back of earnings, some on the back of news that has come in. And clearly the global market seems to be supportive of today's session. So a flat to positive start is what we could be expecting, in line with the way global markets have been trading. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.
I wanted to wish all the viewers of BQ Prime and the channel a very happy festivities and a very happy Diwali. Happy investing.